So next, you could apply the K2 exit strategy. Basically, the K2 exit strategy uh, entails to moving your stop loss up um, in increments of 25% once price reaches 25% and up. So once price reaches 25%, you'll move your stop loss to the entry point break even, which will eliminate all your risks. So if price reverses for any reason, you'll automatically win because then your stop loss won't be the negative. It would just be exactly where you entered from. And then after that, once price reaches 50% in profit, you can move your stop loss to 25%. So you'll eliminate your risk, and then you'll guarantee 25% in profit. So it's a win-win. You'll never lose. Same when it reaches 75%, you'll move it to 50%, and then when it reaches 100%, you can move it to 75%. And if you're monitoring your trade, you can maximize your profits by removing your profit target, and then just keep moving your stop loss up and up and up, so you can basically ride the entire wave up. So I'll show you guys on the chart how that works. All right, so we're right here. We insert on this candle. Looks like it's pulling back a little bit. Oh, but I'll show you guys where to put the stop. So let's see. So 28. I mean, you guys don't have to put the exact pip number. I mean, you guys could just eyeball it because, I mean, it might be a little too much work for you guys. So 50% would probably be around here. 25% would be like right here. And 70% might be like around there somewhere. And then this would be 100%. So let me just write some text in there so you guys can see. 25% profit. Well, also, and this would be break even. Here, just copy paste that. 0%. Even. This would be 50%. This would be 75%. And you guys aren't required to take this exit strategy. This is if you want to be conservative. This is how I have such a high win percentage. It's because I always minimize or eliminate my risk, and I always maximize my profit. Alright guys, so it's retracing back. It hasn't gone into profit yet. So let's move forward. It got to break even. It's retracing a little bit. There we go, it's moved up. So right here, hit 25%. Probably on the next candle, we would, if you put, actually, it's too close, so you probably wouldn't have hit that. So here we go. So we've hit 25%. You could move your stop loss from back here all the way up to break even. So now, like, you have no loss now. If it comes back, you'll just break even. You won't win anything. But I mean, everything here is profit. So let's keep following it. There we go. We hit 50%. You can move your stop loss up here to 25%. So now you're guaranteeing 25% in profit. Let's keep going. Hasn't hit 75 yet. Hit 75 there. So you can move your stop loss up to 50%. And then now this is all profit here. This is all take home. So if this reverses back for whatever reason, you guarantee this much in profit. And it retraces a little bit, a little more. See, it doesn't hit the 50 there. So you're still in the trade. See, if you use the exit strategy, you would have made 50% in profit, which is not that bad. The total here was 28 pips, so you would have pocketed 14 pips, which is actually very good. But if you kept running with it, you just let it run, I'm sure, there you go, it hit 100% in profit. So this is why I'm saying that you're not required to use the exit strategy, but I do recommend it, especially if the markets are choppy. But if you just let it run, you would have hit, double profit. You would have just went 100%. So there goes one example. Let's look for another trade. Let's do one more, and then I'll show you guys some sells. let me delete these because these are irrelevant now. All right, there we go. We have another buy signal right here. And I'm just going to confirm with you guys. So at this point in time, price was above the cloud on the 1 hour, the 2 hour, and the 4 hour. So it's demonstrating a strong trend upwards. There's no news right now. There's like some medium news here, but I'd probably ignore that just because it's medium news. It doesn't always affect the market. So let's go back here, and then let's put a buy position right here on the open of the next candle. So we're going to put at the next swing low, which is going to be right here, 20 pips. Profit target 20 pips away. And then let's do this again. But let me, yeah, if you guys want to see the exit strategy, I'll just plot these on here. So it's probably be 50%. Let's be 25. This would be 0 break even. Let's be 75. Let's move 50 a little higher. There we go. And then we got 100 up here. So we'll put 100% profit right here, 75 right here, 50 right here, 25 right here, and then break even would be right here. All right, let's see how this plays out. So it reached 25% here. You can move your stop loss to break even. So now you've guaranteed profits. Well, not yet. You've eliminated your risk. So if it reverses back, you have a guaranteed win. But if not, you can just let it run. So it's retracing a little bit. Oh, look at that. It's crazy. We won in like an hour and a half. So yeah, I hit 100%. So there's 2 wins. That was pretty quick. That was like, let's see, took this trade. Yeah, so like in 18 hours you had 2 wins. That was actually pretty good. So this was 28 pips. This was 20 pips. Let's do the math on this real quick. So we'd have 28 pips. Oh, actually, so yeah, 28 pips plus 20 pips. Obviously that equals what, 48 pips. So 48 pips times 10 bucks if we were doing a standard lot. You would have made 480 bucks just following this trade. That bad. So you make a $480 profit for those 2 trades. And I'm sure there's more trades following this because this was a strong trend up. All right, so let's look at the sell positions. So we'd be doing the opposite what we were just doing. So so first you make sure there's news. There was news here, so we wouldn't enter on this candle. I mean, there's no signal anyways. So let's move forward. Right here. There we go. So first we would confirm that price is below the cloud on all the charts. So it's below here. It's below on the 1 hour, it's below on the 2 hour, it's below on the 4 hour. So this would demonstrate that we're in a strong trend downward. So we'd only take sell positions. And next we got our sell signal right here. So I'll maximize this so you guys can see. So right here we would take a sell position. And we would put our stop loss at the previous swing high, which would be like what, right here. So we'd set that to, and let's round it up to 15. You guys can always round it up. It doesn't have to be exact. And then let's see how this plays out. Oh, actually, yeah. And then the target will be equal distance away. So we're going for 15 pips here. And if you guys wanted to put the exit strategy, I'll do that for you guys too. So let's see. 50% would probably be like right here. 25% would be like right here. 75 would be somewhere around here. And then 100 would be down here. So I'm not gonna type it up, dude. Okay, so let's I mean, you guys get the gist of it, so I'm not gonna type it up, it's gonna take too long. So yeah, it looks like it pulled back a little bit there. It's coming back down. So if it reached 25 here, you would minimize your you just eliminate your risk. So right here we have no more risk. Everything here is profit from here on out. So if you guys don't want to like move your stop loss closer and closer, I mean, the least you can do is move it to break even or a little bit below break even. So you eliminate all your risk and then you guarantee at least some profit. So if you wanted to follow the exit strategy here, once it hit 50%, you would have moved the stop loss to 25%. So you would have eliminated all your risk and you would guarantee yourself 25% in profit. So let's keep going. Or actually, it hit 75 here, so you'd move your stop loss to 50%. So you guarantee yourself profiting at least half of the trade. Let's keep going. So it hit 75 again. I mean, if you didn't move it at this point, you can move it on the next one. It'd be at 50%. Keep going, keep going. Boom, there you go, 100%. So if you moved your, I mean, regardless if you moved your stop loss to 75, you still would have won because it closed below 75. And the thing is, it went straight to 100. So there you go, to be full profit for 15 pips. And then let's see if there's another trade that came up. Just want to show you guys another one. Let me delete these. Kind of in the way. Alright, so we got a signal there. Put a sell position, open of the next candle. Let's see. So swing high would be up here. I mean, that's super high, but whatever, let's try it out. Alright, so we're going for a pretty big gain on this. This is 30 pips. So let's run it through. Looks like it's bouncing around. Bouncing around. Oh, here we go. We're going into profit. Oh, there we go. Alright, so we hit profit right over here. We made a full 30 pip gain. Alright, so two winners. I mean, we had two winners on the Euro AUD, and we also had two winners on the Australian dollar versus the US dollar. So this was 15 pips plus 30 pips. Let's do the math real quick. So 15 pips plus 30 pips equals 45 pips. And then if you have 45 pips times 10 bucks, if you're doing a standard lot, you would have made $450 profit on those two trades. Alright guys, so I hope this explanation helped you guys. If you guys have any questions, feel free to message me. I'm free to help you guys out. I want you guys to succeed and learn strategy because the strategy is super simple, and as you can tell, you can make a ton of profits running this like all day. Alright guys, so if you guys haven't already, please like, comment, share, and subscribe to us so you can be notified when our next video is posted. And until next time guys.